Hi, everyone. Today it is my pleasure to speak to Katie Bronnenkant about how do we get our accounting and finances right? How do we know that we can trust our financial information? And how to keep our accounting in order? Katie helps early stage startups with finance and accounting, building financial models and business plans that you can take to VC. Welcome to the show, Katie.
Nice to be here.
Tell us, how did you get started working with the SaaS companies?
I actually started in 2011 working with the founder of a company called Namely. They're an enterprise HR SaaS company, and I helped build out that company. I was the first employee hired, so I learned everything from basically doing it myself. And back in 2011, there wasn't as much information on the internet as there is now. Like, there wasn't SaaStr or basically anything. So I've learned the hard way for many things.
Got it. And so all of those years you've been working with SaaS companies, helping them with accounting, financial information, right?
Yeah. So I worked for Namely as a full-time employee for 4 years. I left when they had a couple hundred employees and a few hundred customers. During my time at Namely, I focused mostly on VC raises, and that's how I got so much exposure to finance and accounting, because investors are very interested in your numbers. So I had to prepare everything so that they would be, that they would be investing. And I helped raise about $150 million over that time period. And after I left Namely, I left because I moved to Europe with my husband. And I just started consulting for other companies that were similar to Namely. So over the years, I've worked with about a dozen companies and helping them with finance and accounting.
So you're helping to get our financial models and our finance and accounting in order so that we can go to VCs, or is it like two different things, just accounting by itself and then fundraising? This is in addition, on top of what you're already doing?
Yeah, so I focus on VC-backed companies. So they usually have already raised a seed round. So maybe they have some revenue or a little bit of revenue. And I help them get their accounting system in order. And the reason that you need your accounting system in order is because you have VC reporting. Now, everyone needs their accounting system in order, but those companies that are VC backed, they have VCs asking for financial reports. So if you don't have it in order, you're unable to do that. And I do also support raises. So I've helped build out models using the experience that I have for what VCs are looking at.
I interviewed Thomas Smale with FE International a few episodes ago, and what he's saying is that anything that gets your company good for a sale is good for a company. So same thing with this. Once you get your finances in order for VC, then it's good to have your finances in order, period. So that's what we're going to talk about. What I've heard is that most founders, like, we know that they come from technical background, and they're very technical, analytical, they understand numbers, right? But it's so hard for them to get their books in order, understand what their true MRR is, because sometimes if their clients pay annually, how do I account for that? So let's start with basics of accounting. Can you tell us what are some biggest pitfalls, or like what it is that we need to look out for?
Yeah, I've seen technical or even a sales background. So they're not used to going into QuickBooks or Xero and actually, allocating transactions. That's not something they're used to doing. They understand all of the numbers, like when they look at financial statements, but they don't understand how they get into the right places. So really, I think what's most important for founders to know is that they may have learned in their college classes or even in high school, like double entry bookkeeping and all these technical terms. Like, none of that is really important when it comes to actual practical accounting. There are a few things that are really important to get right. And one is, like you just mentioned, knowing your revenue. And it does seem very confusing, right? If you send an invoice for a full year, it looks like you have all of that revenue in the month that you have it in, but that's not actually accurate. So there's a couple data points that you need to collect to be able to have your books correct. And even if you have an outsourced bookkeeper, that's great, because all you have to do is provide the information to them. So the information that you would need to collect just for revenue to know what your MRR is first you want to understand, what's the closed won date? Like, what is the day that the sale has actually closed? Then what is the live date? When does that customer go live on your service? So maybe you close the deal in January, but they're not going to get set up till March 1st. So that is the live date. And that's the date that the clock starts ticking for when you can start recognizing that revenue. You also need to know the period, right? So how long is that revenue for? Is it a 12-month contract? So if it's a 12-month contract, you're going to divide it by 12. This is the simplest way to do it. You could also do it down to the day, but I think that becomes very onerous for an early stage company. So you would just divide it by 12 and allocate 1/12 starting in March for each month until the end of February of the next year.
Alrighty. Sounds very easy.
I'm trying to keep it light.
What else?
Yeah, so I think, what is next is, so we talked about keeping track of the closed won date. You want that information because you want to be able to calculate customer acquisition cost. That is, how much money are you spending to get a customer, to get one customer, right? So it doesn't matter which day they go live. It matters when the customer signed the contract. So you will sum up all of those contracts that were closed in a particular period and then divide it by the amount you spent on sales and marketing in the previous period.
So we take all marketing and all sales, including our salaries?
Exactly. So all sales and marketing expenses, including salaries, commissions, advertising, events, whatever, even software tools like Salesforce, HubSpot, everything that you're paying.
That's gonna be a lot.
Yeah, and that's how you know if your marketing and sales efforts are efficient. So a lot of companies, they may not be profitable in the first year, right? If the cost to acquire a customer is the same amount of revenue you get for the first year, then you're not profitable, right? You have to make sure that they're staying longer than 1 year in order to make money off that customer.
All right, so the two main metrics that we talked about is MRR and CAC.
Right.
What are some other ones that are really important for us to get it right?
So I think another one that's really important is gross margin. And gross margin is revenue minus direct costs, or cost of goods sold, or cost of sales, or cost of revenue. It depends on the term you want to use. But those direct costs are things like hosting, customer support, and any third-party software integrations. Like if you have single sign-on from another, like a third party, like Okta or something, you will include that in the cost of goods sold. So this tells you how profitable your service is, how profitable your SaaS is. You're looking for something that's between 70 and 90% to be considered in line with industry standards for SaaS companies.
Got it. How about lifetime value? It is pretty hard to sometimes, especially for early stage companies, to calculate that, because maybe we're only 12 months old or like 6 months old. How do we know true lifetime value?
Yeah, so that's a really good point to make. It's very hard to know your lifetime value, but it's an exercise worth doing. And so maybe let's take this example that you're 1 year old. Well, let's use your projections and your historicals of 1 year to see how your lifetime value is changing over time. Because metrics, even though they tell you one particular data point, without seeing the whole picture, it's very difficult to say whether it's good or bad, right? Because maybe in the beginning, your lifetime value is terrible, right? But over time, your lifetime value is improving because you're becoming more efficient in sales and marketing. You're spending less on cost of goods sold.
Okay. So we need to track our LTV over time and see how it's changing.
Right. You need to track all of your metrics over time and see how they're changing.
Good point. How about projections? I interviewed SaaS CFO, Ben, and he talked about projections. He talks about projections a lot. How can we create those projections? I've seen those spreadsheets. They look like something that hard to approach.
Yeah. I think that there's a few different ways there's a number of acceptable ways to create projections, right? So I don't want to say that there's only one way to do it, but the ways that I like to do it is use sales or marketing as the top of the funnel. And you see, how many leads do I need to put into those resources in order to get a conversion of the projections that I want of the revenue that I want to get to. So an example would be, right, if you have an enterprise B2B SaaS company, they often work with an SDR or BDR team who finds leads. They qualify those leads. They pass them on to an account executive, and the account executive closes the deal if it makes sense, right? So you need to know how many of those leads you have to fill into the SDR team in order to get a certain amount of revenue. And those are the types of assumptions that you have to make. The same as if you're more of a B2C type of company. You'll use marketing to get your leads. So you start with the top of the funnel. How many, visitors do you need to your website? And then how many signups for free trials and everything like that.
Can you share with us a little bit more practical information? Like what tools can we use to track all of those metrics and do all of those projections and calculations? Because I hear from so many founders that, yes, we've heard this, like we know how to do that. It's a matter of doing that. So can you give us something that we can just take and do?
Yeah, something a little easier. Let's do it a little easier, right? So if you have one salesperson, how many deals do you think that salesperson can close? Right? If you say, I want $1 million closed this year. Okay, so that person has to close $83,000 a month. Is that possible? How many deals do they have to close? Just try to take yourself through that situation. It could be possible. Maybe it's not possible. Maybe there are things like seasonality where it depends a lot on, the season. A lot of companies close a lot in Q4 because if they're B2B, the budgets renew in Q1.
Got it. How about tools? Do you recommend any specific tools that we use, or like something like Xero should be enough?
I honestly use Excel. I think Excel or Google Sheets. I think that those are the best tools when you're doing something without really understanding, like using one of those like a software. You don't really know what's happening in the back. If you do it manually, then you understand each of the pieces. And I always would do anything manually. Even if I have 1,000 customers, I can do 1,000 rows in a spreadsheet pretty easily, just so I can understand what's actually happening.
I like it. Do you have any templates that you would recommend? Because I agree, like when you're inputting those numbers into the system, you don't really see what's happening on the back end. And then when the numbers do not make sense, you probably don't really know what it is that's not making sense. And while you do it in Excel, especially at the beginning, well, first of all, I know that so many technical founders are getting hung up on those tools and like I'm using this software or that software, and it's just taking so much time. And really what it is procrastination. Instead of doing things, you're like thinking about the tools. So just doing something in spreadsheet sounds really something that I would think is the easiest thing to do. All right, but let's say that we got those numbers. What are some other things that we need to do in order to keep? Is this enough? Is it the first step? Is it enough for us to say that our accounting books are in order?
No. So we talked about revenue. Let's say we got revenue in order, just like we talked about, making sure that revenue is being recognized. I mean, it shows up on your P&L in the correct period. We have cost of goods sold, correct. Now we have to go to the other areas. We need to break out all of our expenses into sales and marketing, R&D, and G&A. All of them, even salary. So that means in sales and marketing, you have all of your sales and marketing salaries, you have your commissions, you have all of the tools, everything that the sales and marketing team needs that you're buying for them has to go in there. For R&D, that's engineering and product and all of their software tools and anything special that the engineering and product teams need. And then G&A is going to be accounting, expenses, lawyers, rent, all of those expenses that really apply to basically everything in the business or every team. You have to break it out like that, because in order to calculate your metrics, you need to have sales and marketing split out. If you don't have it split out and you're running your report from QuickBooks and you're saying, okay, well, I have to add up the salary from over here plus part of this software plus this line, then you kind of have something that's really hard to manage. It's very cumbersome. But if you have it broken out correctly, then it's just one cell divided by another. Also, when you're looking at your profit and loss statement, you want to look at it in this way. An early stage company is going to spend most of their expenses on R&D. As the company grows and becomes more mature, they're going to spend most of their expenses on sales and marketing. Why? Because in the beginning, you were building out your product, and in later stages, you're spending it to sell your product. You're investing in selling your product. And G&A should never be very high. Like I would say 20 to 25% maximum.
So then even before we start working on our metrics, we need to get to break up those expenses, right? And did
Exactly.
you say that was 3 or 4 different sections?
3 sections. So, we talked about revenue and cost of goods. Then the 3 sections are sales and marketing, R&D, and G&A.
Got it. Are there any other questions that I didn't ask you, but I should have?
I actually wanted to tell a story about a company that I worked with and why spending time on finance and accounting is so important. Because you might think finance and accounting is just like another area of the business, but you're a founder that's technical. So coding or whatever it is that's technical is most interesting to you. But if you don't spend some time on accounting and finance, the risks are really just losing money or going out of business. I worked with a company who wasn't, they were working with an outsourced bookkeeper for a few years. And I started working with them and we did an audit. And we found that the outsourced bookkeeper hadn't invoiced about $50,000 in invoices because they weren't following a system by going through all of the accounts that they should have been invoicing each month. So they missed about $50K. So even though this was a year old, we sent out those invoices. Some of the customers paid them right away, but some of the other customers protested the invoices because they said, oh, I don't owe that. I don't remember. It went through like a lot of reasons, like because it's a really long time to not invoice someone. So in the end, they lost $25,000. And to a big company, maybe $25,000 isn't a lot of money. But to a small company, it's a lot of money. And it's money that you actually earned. And just by spending a couple of hours each month, you wouldn't have lost it. So it's really important.
Got it. All right. Are there any last parting words?
I think the most important thing to know is that finance and accounting is your friend, and it's not as hard as it has to be, right? Just because the terminology is a little intimidating initially, it doesn't need to be confusing. I started working in finance and accounting without having any SaaS finance and accounting experience. And I learned everything just by reading and looking things up, especially reading annual reports and making a lot of mistakes. So it's totally possible. And now with all of the information on the internet, you can find almost anything you need to know. So I think you should just spend a couple of hours each month trying to make sure that your stuff is in order.
You're right. There's so much information out there, but how do we know which one to trust and which one has complete information? Do you have any specific recommendation of a book or resource where founders just can take all of this information from a single place?
Not on finance and accounting. And I think that's for whatever reason, it's not the coolest topic. There's like hundreds of books on sales and marketing or development or the lean startup, but no one's giving you this information. I'm working on doing that as much as I can.
Sounds good. Well, tell us where founders can know more about you.
So I think the best place to find me is on LinkedIn. My website is my name, KatieBronnenkant.com. I work with early stage VC-backed startups, and I help to get them in their finance and accounting in order to either be able to do VC reporting or to do a raise in, the near future.
Got it. Thank you so much, Katie. It was a pleasure.
It was nice talking with you.